Hi, I'm Andy Alloway. I'm the owner of Nebraska Realty. We've heard a lot about the tax reform bill for probably a year now, but it just recently got passed, and there's wide-ranging implications that we're still all trying to figure out. But three of them that specifically pertain to the real estate industry, we felt were pretty big wins that we lobbied very hard for. And one of them was the exclusion of the gain on sale going from 2 years out of an aggregate of 5 to 5 years out of an aggregate of 8. So what that means basically is homeowners for a very long time have been able to have an exclusion for capital gains tax that's paid on a sale. If you're a single person, up to $250,000. If you're a married couple, up to $500,000. So if you lived in your house for at least 2 years out of 5, then you could go and you wouldn't have to pay capital gains tax on any gain that you received. And so that was a really big benefit. Had that moved, the original proposal was to take that, instead of living in it for 2 years out of 5, it was 5 years out of 8. And because we have such an inventory shortage right now, that would have put an even bigger burden on our housing market as it is. So the fact that that remained 2 out of 5, I think, was a very positive thing for homeowners. The second one was mortgage interest deduction. For a very long time, homeowners have been able to deduct their mortgage interest. If the loan was less than $1 million, you could deduct your mortgage interest on your home. And I think this was a big thing for all homeowners to be able to reduce their tax liability. So not only was this retained, now it was reduced a little bit to $750,000, but for the vast majority of people, it was retained. For a period of time, it was on the table to actually go away altogether, and then it was at $500,000. So bringing it back to $750,000, we feel was a big win for our industry, for homeowners in general, and they even retain the ability to deduct mortgage interest on second properties or home equity lines. And there's some restrictions there, but those were some pretty big wins that we'd lobbied for. And then the third one, the deduction for state and local taxes. Again, this was slated to go away altogether. If you were an itemizer on your taxes, this was going to be eliminated. The fact is that it is capped now at $10,000. So for people that itemize, and the standard deduction was doubled, which is good for a lot of people. But if you're an itemizer, because of your income limits are a little bit higher, your state and local taxes are capped. So real estate taxes, especially in a high state like Nebraska, where you might pay a lot of property tax, those are capped at $10,000, and that's a combination of your state income tax as well. So three provisions that were affected in regards to real estate by the tax bill. If you want any more information about any of this or anything else relating to that, please don't hesitate to give us a call. Thanks for watching today.